Everybody, welcome to part two of our accounts receivable journey. It's always exciting. So coming right over here, we're going to be going through some more aging questions, bad debt expense, write-offs, recovery of accounts previously written off. This will be part two. This is by the accounting professor. That's myself, Bennett Tchaikovsky. This presentation is copyright 2008 to 2024. All rights are reserved. Any redistribution is expressly prohibited without my prior written consent. Opinions expressed herein are those of myself and do not represent those of Irvine Valley College or the South Orange County Community College District. So let's go ahead and jump right to it. And we've got over here Zizix Inc. had the following balances on 1/1/30. Accounts receivable, allowance for doubtful accounts, opening balance of 420, and then a credit balance for the ADA of 80. And we got some additional information, had credit sales of 900,000 in 2030, collected 650 of the credit sales in 2030, collected 200 of the AR that was outstanding on 1/1/30. I over here wrote off a receivable from ABC for 32,000. On 3/1/30, collected a receivable that had been previously written off for 48. And then I'm estimating that 30% of my AR will not be collectible. Okay, so got a lot of stuff going on here, but let's just go ahead and start over here with our T accounts. So when we're going to go through here and do this, remember, right, when I'm doing T accounts, my assets are equal to my liabilities plus my owner's equity. Okay, DCER, right? So I'm going to be recording assets with debits. Assets are increased with debits, decreased with credits. Expenses are generally recorded with debits. Revenues are generally recorded with credits, and my liabilities and equity accounts will be increased with credits and decreased with debits. So coming over here, we have some opening balances. So as of 1/1/30, my accounts receivable had a balance of 420,000, and my ADA, or that allowance for doubtful accounts, on 1/1/30 had a balance of 80,000. This is data that's given to me right up here. Okay, so now the next thing it tells me is I had credit sales of 900,000 in 2030. What would that basically mean? Well, if I have sales on credit, assuming these are services and not goods, basically, if I have sales revenue, I'm going to record that with a credit. And for every credit, I need a debit, means that I had 900,000 of credit sales. Okay. So that's basically mean I had sales on credit of $900,000. Okay, let's go to B. I collected 650,000 of those credit sales. So what this means over here, if I'm collecting accounts receivable, I collected 650,000. So I'm going to show over here, I'm going to debit cash over here for 650, and I'm going to go over here and credit accounts receivable. Now, on these questions, do you have to be showing sales in cash? The answer is absolutely not. I'm just doing this here just because I think as a student, it's better visualization. Okay, so now coming over here to our next one, collected 200,000 of the AR that was outstanding on 1/1/30. So again, this would be over here, C 200,000. And that would be also be letter C. Okay. Now, when I write off a receivable, right, I never use bad debt expense. Rather, what I'm going to go through and do is I'm basically going to say, okay, if I'm writing off a receivable, I'm going to debit the allowance for doubtful accounts, and I'm going to credit accounts receivable. So it's asking me to do a journal entry on 2/1/30. Okay, so over here, when I write off an account, meaning that I'm no longer believing I can collect the AR. I'm going to credit accounts receivable over here for 32,000, and I'm going to debit the allowance for doubtful accounts for 32,000. Okay, this would be letter D. So I'm going to go over here, 32,000, letter D, and then 32,000 for the allowance for doubtful accounts. On 3/1/30, I collected a receivable that had been previously written off. Okay, for this particular question, what we're going to want to go through and do is if I'm collecting a receivable that I previously did this to, right? What I'm going to go through is I'm basically going to say, I have to first reverse the curse, meaning that I'm going to debit accounts receivable and then credit the allowance for doubtful accounts. And this is going to be for 48,000, right? Because I collected a receivable that I've been previously written off. So step one is I restore the receivable, right? That's what I'm going through and doing here. I'm basically restoring it because I had previously written off. I'm collecting something that was previously written off. So step one is basically going to be restoring the receivable. Then I'm going to show the cash collection. So over here, accounts receivable, credit cash for 48,000. Okay, so over here for letter E, I've credited my allowance for doubtful accounts for 48,000. Over here for the accounts receivable, for letter E, I'm showing this as both an inflow, meaning I'm restoring it, as well as an outflow to basically show the payment. And for good measure, I'm going to show that cash, wow. It's going to be cash accounts receivable. Wow, Tchaikovsky, you're losing it today. Let's state this again. I restore the receivable. Then I need to show the cash being collected. Cash is an asset. Assets have debit balances. We're going to show that increase with a debit, decrease with a credit. Hopefully I wasn't causing too much Tchaikovsky derangement disorder, right? Tchaikovsky derangement system, right? TDS. That's what for accounting. We got to make accounting great again. Got to have fun. Okay. So coming over here, right? Got to have fun. This is a crazy, crazy political season, 2014. Debit AR, credit ADA. We're going to restore that receivable. Then we're going to show that cash being collected. So to record a receivable collection that was previously off. Okay. So now got to show that cash coming in over here. Don't have to do this part, but I'm just doing it anyways for letter E. Okay. So I got the receivable going in and out. There we go. Now, the last thing I'm being asked to go through and to do is to basically say, okay, we've done the journal entries here, prepare the journal entry to record bad debt expense. In order for me to go through and record bad debt expense, I need to determine what is the ending balance in the allowance for doubtful accounts. It tells me here that I'm estimating that 30% of my AR will not be collectible. So if I look over here, so my accounts receivable had a balance of 1.36 billion, or 1.36 million. We collected 930. So my ending balance is 438,000. My ending balance in the allowance for doubtful accounts is going to be 438 times 30%, or 131,400. What I can also do right here before I get to bad debt expense is I can prepare the balance sheet presentation for accounts receivable. So on 12/31/30, assets, current assets. Remember, it's accounts receivable is a current asset. I'm going to have accounts receivable less my allowance for doubtful accounts gives me accounts receivable net. Okay, so coming over here, my AR has a balance of 438. My allowance for doubtful accounts is 131,400 or 3066. So this is my balance sheet presentation for accounts receivable. Now, I need to now go through and figure out what do I need to do in order to balance this particular account. When I go through and record bad debt expense, it's whatever I need to do. I need to analyze the account to get to my allowance for doubtful accounts. I'm going to debit bad debt expense 12/31/30 to record bad debt expense. Okay. So in this one over here, this is a little bit trickier, right? So if I call this 80 plus X plus 48 minus 32 equals 131.4. Okay. So I'm solving for X. I need to know what this amount is. So another way I could write this is going to be 128 minus 32. So this is going to be X plus 96 equals 131.4. My bad debt expense, or X, is going to be 131.4 minus 96, or 35,400. What you need to always do, make sure the number works. 80,000 plus 35,4 plus 48 minus 32 is 131.4. So my bad debt expense is going to be right over here. And I'm done with this particular question. So thank you for joining me here today. I look forward to seeing you on additional videos. Hopefully I didn't cause too much Tchaikovsky derangement syndrome, which I can do as we're trying to MAGA, make accounting great again. So that's the kind of MAGA we want. Anyways, thank you so much. I will see all of you soon. Have a great rest of your day, and I'll see you on future videos. Take care.